Like and subscribe and click the bell icon to get new video updates.
Netflix mass exodus spooks Wall Street, as gains Australian shares are trading higher, boosted by industrials after Netflix stocks plummeted, causing pain on New York's tech-heavy Nasdaq exchange. The benchmark S200 index rose 0.3% to 7,597, while the broader All Ordinaries was up 0.3% to 7,895. 8 of 11 sectors on the AS200 were higher in early trade. The top-performing stocks were Challenger Limited, plus 8.6%, Brambles Limited, plus 7%, Clinuvel Pharmaceuticals, plus 4.7%, Liand Lease, plus 3.9%, Viva Energy, plus 3.4%. Tech was the biggest drag on the S200, down almost 3%. Leading the declines were Megaport Limited, minus 18.2%, after the tech company's earnings update failed to impress investors. Other worst-performing stocks were Life 250 Incorporated, minus 4.9%, Tyro Payments, minus 4%, Emil Payments, minus 3.5%, Alumina Limited, minus 3.3%. BHP Group stocks dropped 2.4% after the miner fell short of estimates for iron ore production for the March quarter. BHP also warned June quarter production of steel-making commodity iron ore is also expected to be impacted by worker absenteeism, but said it remained on track to meet fiscal 2022 costs and forecast volumes. Iron ore production from Western Australia came in at 66.7 million tonnes, MT, for the period, flat from a year earlier but lower than a consensus estimate of 70 MT compiled by Visible Alpha. Copper production at BHP's massive Escondida copper mine in Chile declined 9% to 226,400 tonnes, mostly due to a reduced workforce from COVID-19 quarantine regulations and protests by workers and environmental activists. Chile, the world's top copper producer, earlier this month sued BHP, among others miners, over alleged environmental damages caused by its operations in the Atacama salt flats. That, along with road blockades, threats of work stoppages over alleged worker contract breaches, and surging COVID-19 infections at Escondida have affected production at the project, which houses the world's largest copper deposit. Rival Rio Tinto has also reported lower than expected iron ore shipments for the 3 months to March. It warned of risks from sustained high inflation, a resurgence of COVID-19 lockdowns in China and a prolonged Russia-Ukraine war. BHP Chief Executive Mike Henry also said market volatility and inflationary pressures had increased further due to the Ukraine crisis. While conditions are expected to improve during the course of the 2023 calendar year, we anticipate the skills shortages and overall labour market tightness in Australia and Chile to continue in the period ahead, he said. However, BHP said its Queensland coal operations were expected to hit output guidance of 68 to 72 million tonnes for the full year. Mixed day on Wall Street. The Dow Jones Industrial Average rose 249.59 points, or 0.71%, to 35,160.79. The S&P 500 lost 2.76 points, or 0.06%, to 4,459.45, and the Nasdaq Composite dropped 166.59 points, or 1.22%, to 13,453.07. Netflix's decline in subscribers weighed on both the streaming giant and other high-growth companies, which investors feared may face similar post-pandemic performance issues. Netflix Incorporated plunged 35.1%, its largest one-day fall in more than a decade. The company blamed inflation, the Ukraine war and fierce competition for its subscriber decline and predicted deeper losses ahead. Netflix is a poster child for what happens to growth companies when they lose their growth, Kim Forrest, Chief Investment Officer at Bokeh Capital Partners, said. People buy growth companies because they think their cash flow is going to grow, so they're repaying ahead for anticipating that. When a stock like this tumbles, people looking for growth back away quickly. Netflix's stock market value has now fallen by 2/3 from its peak of over $300 billion late last year. Netflix's market capitalization now stands at about $100 billion, $134.2 billion, by far the smallest among the so-called FAANG group of stocks, which refers to the 5 most popular tech stocks in the US. The group also includes Facebook owner Meta Platforms, Amazon, Apple and Google owner Alphabet. These stocks fueled much of Wall Street's rally in the years prior to the 2020 COVID-19 pandemic. Meanwhile, a U.S. law firm has asked investors who have lost more than $250,000 in the Netflix crash to contact them to discuss their options. Read more. The ripple effects were felt both by financial technology names and companies whose fortunes were seen to have been boosted by pandemic trends such as lockdown measures. Streaming peers Walt Disney, Roku and Warner Bros. Discovery all dropped more than 5.5%, while Zoom Video Communications, DoorDash and Peloton Interactive lost between 6% and 11.3%. Suffering financials included PayPal Holdings and Block Incorporated.